Each year I get to talk to literally hundreds of investors who are looking for a way to go from where they are today to financial security in the future. Now, we all know property is the vehicle, and there are so many different ideas and books out there where people are saying we need 10 plus properties to get to financial freedom. But in today's video, I wanted to talk about our 2 properties to financial freedom strategy, a simple way that you can set yourself and your family up for not just financial freedom, but better quality choices in your future. So excited to bring this simple idea to you. So the first phase is super easy, and you can do this in a number of... It's coming out of my mouth. So step 1, accumulation, is super simple, but it's also hard because this is where we have to save money. This is where we have to buy properties. This is where we have to learn about the market. This is where we have to take that calculated long-term risk. Now, it simply starts with going and buying one high-quality home and then building a high-quality tiny home or granny flat secondary dwelling on it. So let's say we go out there and we buy a nice big 600 to 800 square meter piece of land with a good quality tenant ready low maintenance home at the front for $500K, and we rent that home out for $450 a week. Then when we're in a position either straight away or down the line when the banks will lend us some more money, we go and build that tiny home or that granny flat out the back. Now that at the moment should cost around about that $200K mark, maybe a little bit cheaper, maybe a little bit more expensive depending on the size and the quality. And that granny flat, once it's completed, depending on the part of Australia, should rent for at least another $350 per week, especially up here in Brisbane, which is the market that we target. Now, there is an asterisk on this one, which is we can't build granny flats in every part of Queensland. There's many other states in Australia that have very different laws. I know they don't like them at the moment down there in Victoria either. So you really want to talk to a planner at this stage, make sure this is a safe strategy as well as a builder, and make sure after speaking to the council that you can actually rent this out to somebody separate as well, because there's so many different laws on this around Australia and public planning policies. But let's say you bought an incredible part of the city of Brisbane where we can legally do this. So we've got our $500K home, rents for $450 a week. We build our granny flat for $200, the rents for a further $350 a week. We're getting a total of $800 a week in rent from that one property. Then you'll talk to your accountant and get a tax depreciation schedule set up, which at the moment in Australia you can get some nice little tax benefits from the house and the granny flat too. And you've got your home set and forget. So that's step 1 of the first stage, the accumulation phase. The second step in that first phase is really simple. We rinse and repeat the exact same thing again. Now, property prices might have gone up slightly, they might have come down slightly, but we're trying to do the exact same thing, most likely in a similar marketplace or the marketplace that's the right one at the time. So ultimately, at the end of this phase, we want to have 2 houses. The total value of those houses, $700K plus $700K, gets you to about that $1.4 million mark, with around about that $1,600 a week of combined income from the 2 houses and the 2 granny flats, getting you about that $80,000 per year of income today. So that first stage, the accumulation phase, for some people, I've got clients that have done that in literally 6 to 12 months. I've got other clients that we're 6 years into our journey and they've just completed the first property in the first granny flat. So regardless of where you're at, investing is a marathon, it's not a sprint. It does take time. As an investor, I started at 24, I'm 36 now, and I'm still working towards my financial goals. But I promise you, if you stay focused, if you have the right plan, if you build the right team of advisors, and you accumulate the right assets, you can be in an exceptional position 10, 15, 20 years down the track, all things working out like they have historically. Now we get to the second phase, which is a little bit more boring in terms of the doing stuff in the property space, but it's a lot more fun for your lifestyle because you don't have to be as much as a Scrooge on your budget during this stage. You're no longer saving deposits for your property. The step 2 or the stage 2 of the 2 properties to financial freedom strategy is really the consolidation and debt reduction phase. Now, over the last 12 years, after talking to many accountants, solicitors, property managers, and investors, I've accumulated a few, maybe 5 simple ideas to help you pay off that debt faster that I'm applying myself. The first one is the good old fashioned, which the bank wants you to do anyway, pay principal and interest. Now, over the next 30 years, if you did that strategy, worst case scenario in 30 years, you would have paid the property off outright, which is a great outcome if you're in your 20s. Means by your 50s, you're financially free. But I know you guys, like myself, want to be financially free faster than that. So the second idea is if you get any tax benefits from owning the houses and the granny flats, and the accountant enables you to get those in with the government at tax time, whatever you get, whether that's $2,000 a year or $10,000 a year, use that chunk of cash rather than spraying it on a jet ski or a holiday like most Aussies do, to go straight into paying off either your own home or the investment properties that you hold. Another idea is as the rent increases over time and the debt declines on the property, you're going to be left with a little surplus at the end of each week, at the end of each month or year. Instead of again spraying that money on whatever, whether it's $100 a week or $600 a week of passive income, take that money and pay off the debt on your own home or your investment properties faster. That simple idea of the tax benefit and the surplus income is absolutely life-changing. Now, the fourth simple idea I have is during step one, the accumulation, you save money each week to put towards a deposit for a granny flat or a home. But once you move into the second phase, you're no longer saving a deposit anymore. So if you've got a little bit of money left over, $100, $200 per week per property, maybe, if you've got a good budget and you're in a safe position, you can whack some of that money off the debt, and that'll help reduce the term of the loan, and it'll help you speed up the repayments as well. The fifth idea, which I've used many times myself and is to just help you, go a little bit faster with this, is to invest in other asset classes. Now for me, property's my game, so I call these partner properties. Let's say you own the 2 houses and 2 granny flats, you're in a safe position, your wage goes up a bit, the debt goes down a bit, and you go, hey, I'm actually in a position to maybe go borrow money for one more home. Go buy that one more home 10, 15, 20 years down the line when that property has gone up in value. You can then sell that property and use that chunk of cash after you've paid the tax department back on the gain that you've made and the agent for selling it for you to pay off a huge chunk of debt fast. Now, this is an incredibly quick way of doing it, and it might not take you 15 years to get a good gain on your property. Like if you had bought something in Sydney in 2012 and sold it in 2020, that 8-year period, if you had bought something for $500K, you might have sold it for $1 million, which is a huge upside. Maybe if you're buying in Adelaide, Perth or Brisbane and you sell in 10 years from now, maybe there'll be some good upside in those markets as well. Now the third phase, like I said at the start of the video, is the choices, the freedom, the lifestyle stage of this journey, and that's when you own your properties completely outright. You've got enough passive income in to cover your expenses, hopefully not just your variable, but your lifestyle. Now, based on this idea of owning the 2 houses and 2 granny flats, which are worth $700K today, that are renting for $800 per week each or $80,000 per year, if we fast forward 15 years into the future, based on those properties growing by 4.8% per annum over the next 15 years, which is super low, those properties which are worth $1.4 million today should theoretically be worth $2.8 million in 15 years time, which debt-free would be an amazing position to be in. And then theoretically with that rent, which is 80 grand today, increasing by just a small 2.5% per annum, which is inflation of rents over the longer term, those properties will now be renting for around about $115,000 per annum. So you can see how just these 2 simple houses and granny flats can get you into a much better financial position in the future. Now, I'm being super conservative on the rental increases. I'm being even more conservative on the capital gains. In fact, Sydney, Melbourne, Brisbane and Perth, if you average out the total returns in the last 50 years, 9.7% growth. So saying they're going to go up by 4.8% based on history is very conservative. Now, when we get to this lifestyle phase, that's when all the fun begins. That's when We can spend more time with our friends, our family. That's when we can do work that's meaningful for us. We can start that business. We can invest full time. We can spend more time traveling, volunteering, whatever your passion is. But the biggest thing that I've learned in recent years is we don't have to wait for freedom to begin living the life that we want. In fact, as soon as you've accumulated the properties and you've got the houses and granny flats set up, that is actually the time to step into your best self. Now, speaking with one of our clients, instead of doing 2 properties because he wanted to go further, he's actually bought 4 in the last 3.5, 4 years. His name's Kevin, an incredible guy living in Sydney. Kevin said to me, which was so beautiful to hear, that he's busted his ass for the last 3 years because it does take hard work to accumulate houses and build granny flats. But he said he's at the point now where with the rental increases, the debt reducing a bit, the tax benefit, that he's actually decided to start stepping back in his really, really serious, really stressful insurance broking job. And he's actually going to go down to 4 days a week and start taking some more annual leave. Now, hearing these things from our clients is absolutely beautiful. At the start, when he started with us, he was very anxious because he was always thinking about the future. He was very stressed out in his job. He didn't know where to go next. And now he's a lot more mindful. He's settled down. The person that he wanted to become, he's now built the portfolio to become that person, and he's starting to relax. He's starting to mentor and help other people. And this is the benefit of, confronting that fear. I know it can be scary at different times of the market, but people that decided to invest in Sydney or Melbourne 10 years ago, or they're starting to invest in Brisbane, Adelaide, Perth now, are the ones that will see the benefit of the result of that confronting the fear over the next 10, 15 years, and the ones that will set themselves up longer term. So if you're one of those people, I'd absolutely love you to book a one-on-one strategy session with myself or my brother Simon, where we can talk about where you are today, where you'd like to be longer term. We can talk about interest rates, elections, where the market's at right now, where we are in the real estate cycle, where Brisbane's at right now, where you can buy houses and granny flats, and then you can take that, you can smash it, and you can do it on your own, or you can become one of the small number of people that we take on each month. Simply jump over to www.pumpedonproperty to do that. Either way, we wish you all the safety in the current market and all the confidence moving forward. Please invest safely.
Woo! That's a wrap. That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah.
Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.